Good afternoon. It's great to be with you all today. Let me start by providing you an overview of the cloud and network services business. The business focuses on software and cloud. It's what we sell. It's where we have our leadership. It's our DNA. We are a 3.2 billion euro business built on a strong foundation for growth. And when I say a strong foundation, I mean that we are a leader in multiple markets. We are number one in communication software, number one in private wireless networks, and number one in cognitive or intelligent services. In the aggregate, our estimated market opportunity is quite large, 25 billion euros, and it is expected to grow at a 2% compound annual growth rate over the period of 2020 to 2023. As you'll see in a minute, there are pockets of much stronger growth that we address. Perhaps most importantly, cloud and network services is a business that is taking share and growing faster than the overall market. We are focused on creating value for service providers and enterprise customers by leading the transition to cloud-native software and as-a-service delivery model as demand for critical networks accelerates. Now let me take you through some of the key market dynamics and disruptions that are driving the growth in our business. Our service provider clients are facing unprecedented revenue and cost pressures as increasing competition emerges in the race to 5G. To win, they are changing how they architect, operate, and secure their networks. They need to quickly automate and improve efficiency. They are looking for flexible ways to deploy their capital, get to market quickly, and monetize their assets. And it goes without saying that COVID changed everything. Resiliency, capacity, and automation requirements increased dramatically. According to our own Deep Field Network Intelligence report, many networks experienced up to 50% traffic growth in just a few weeks. With data traffic up, it's no surprise that security attacks also rose by 50%. As CSPs disaggregate and open their networks, and industrial enterprises increasingly connect more of their previously airlocked mission-critical assets, the data explosion and security challenges only increase, driving the need for an end-to-end protection with strong security software and processes. Finally, when we think about mission-critical assets in the enterprise market, we must acknowledge the megatrend towards industrial automation and the digitization of industries. While the trend started several years ago, the market is at what I call a private wireless inflection point. Today, it is so well recognized that industrial private wireless networks now provide a level of predictable performance that is required to drive industrial automation and digital transformation. Collectively, these market dynamics are creating new opportunities for Nokia and our customers. Simply put, agile cloud-native software is becoming a requirement. Automation of the network and of mission-critical assets are moving to the top of our customers' agendas. Security is the top concern we hear from both our service provider and enterprise customers. Monetization of network capabilities and information is an opportunity for our customers to go beyond the basic broadband connectivity services. And finally, consumption and delivery models like software as a service are emerging as an important way to get to market quickly and deploy capital efficiently. The trends are creating growth in our addressable market. As I noted in my introduction, we expect our overall opportunity to grow at a 2% compound annual growth rate from 2020 to 2023. However, there are pockets of strong growth in emerging areas within our market. The emerging areas are tied closely to the trends I just highlighted. These areas are growth in 5G core, widening use of analytics and AI-based services that will add intelligence to the network and how it is managed, accelerating uptake of private wireless and industrial automation, increasing investments in digital operations and closed-loop automation, and surging interest in managed security. In these areas, we expect the market growth of 150% between 2020 and 2023. Meanwhile, we expect declines in the 3G, 4G core markets, in several legacy application markets, and in the legacy transactional, managed, and network performance services markets. It goes without saying that we are focused on the high growth opportunities. We are actively pivoting our R&D to capture technology leadership in these areas and expect our business mix to change dramatically as a result. By 2023, we expect to nearly double the portion of our business that comes from the emerging opportunities to realize the benefits in both our top and bottom line. In cloud and network services, our fundamental strategy is based on having technology leadership. There are 4 areas of technology leadership and 2 important enablers that will collectively drive our success in the emerging market opportunities. They are security software, automation software, monetization software, and something we call everything as a service. Each of those technologies is powered by advances in analytical and artificial intelligence with flexibility of operation on any cloud infrastructure. Let me provide a little bit more context around how we are leading in each one of these areas. As I shared earlier, security is the top concern we hear from our service provider and industrial customers. Governments globally, such as the United States, UK, India, France, and others, are strengthening the security requirements for critical infrastructure. We have responded and are protecting our customers' networks with end-to-end security automation and self-protected networks. As an example, Telia has trusted us to help simplify their security operations. Our security solution equips Telia with security orchestration, automation, and response capabilities to enable what we call the self-protected network. This means we are rapidly preventing and stopping threats before they materialize and do so almost instantly. Further, Telia can be confident that it is in full compliance with the European Union's General Data Protection Regulation. Telia is just one example amongst many where we are providing a technology leadership in the security domain. Automation is another area of technology leadership for us. It is arguably the most important aspect of 5G because it enables end-to-end network slicing at scale across Nokia's portfolio and in a multi-vendor configuration. Automated network slicing is the key to creating and monetizing unique 5G services. One customer who's leveraging our leading-edge innovation in this area is Singtel. With Singtel, we are implementing 5G network slicing to provide highly customizable services and faster time to market for a variety of 5G use cases and applications such as virtual reality, IoT, and smart factory applications. With this cutting-edge technology, Singtel will be able to offer an enterprise customer a secured network slice in a matter of minutes versus the current weeks or months it would take. In monetization, we are offering our customers top-line growth beyond the traditional broadband capacity model that is prevalent in the market today. Service providers that are creating a digital brand see clearly the opportunity to customize services that can be activated by the end user or create entirely new revenue streams from cloud gaming or secure VPN services. We recently deployed our fully cloud-native monetization suite with Agile Rules technology to Rakuten to enable new digital and network slicing services. This provides Rakuten the ability to rapidly package, price, and promote a wide range of consumer and business services. With this deployment, Rakuten can give its mobile customers a truly new digital experience across multiple services and enhance the monetization of its network assets. And we don't stop there. While our customers appreciate a secure, automated, and monetizable network, it is there as a service model that gets them to market more quickly with new services in a capital-efficient way. Our enterprise customers, such as utilities, ports, mines, and manufacturing, have rapidly embraced this approach in deploying private wireless networks and industrial automation as they embark on their digital transformation journeys. For example, we were recently selected by Tideworks Technology to deploy an industrial-grade private wireless network as a service at the Port of Seattle in the United States to enable port automation. We are providing our cloud-based automation service platform called NDAC to give the Port of Seattle a reliable, secure, and a high-performance private wireless network, which will deliver major increases in efficiency, worker safety, and terminal handling capabilities, performance by reducing the complexity of port flow. Our leading-edge platform will deliver seamless connectivity as a service, indoors and across port operations, cranes, trucks, and lifts. One reason we have technology leadership is because we have built those technologies based on analytics and artificial intelligence. Self-protected, self-healing, user-activated networks are simply not possible without analytics and AI. Take Telefonica. In Colombia, its affiliate, Movistar, is leveraging our digital operations software that is allowing it to complete more than 43 million tasks on a monthly basis through near zero-touch automation coupled with analytics and AI. Optimizing Telefonica, Movistar's network processes, and providing a better experience to its customers. Another reason our customers value our technology is our approach to openness. Our technology is deployable in any cloud environment, public or private. This provides our customers with the flexibility to consume the technology to suit their business model. In addition to the technology leadership we have today, we continue to invest for the long term through collaborations with Nokia Bell Labs. As I said, our strategy is based on technology leadership, and I hope you have a deeper sense of what we bring to the table and how we are investing to address those emerging opportunities and create value for our customers. As you see, our customers recognize our technology leadership, and more importantly, they value what we deliver to them. Let me share with you some important proof points of what we have accomplished with our customers thus far. Over 50 5G standalone cores, first with 5G standalone charging, and first to deliver private wireless as a service for enterprise clients. All of these accomplishments enable faster time to market with new technology-based capabilities. Our customers rely on our expertise in critical networks, and we deliver. We are a leader in the core market with 250 plus networks deployed. For enterprise, we have delivered over 1,500 mission-critical networks across industry segments such as energy, transportation, manufacturing, and public safety. We also operate and manage networks and security services covering over 1 billion subscribers. To thrive in the emerging digital ecosystem, our customers require our software openness to multi-vendor settings with no lock-in. We actively engage with them on open software standards, open source, and open APIs. And finally, our customers are looking for a partner that they can trust. Trust is the reason we work with every one of the top 50 service providers globally. It is why we have a leadership with 260 private wireless networks deployed. And it was a critical reason we were recently selected as a partner by the US National Cybersecurity Center of Excellence for the 5G cybersecurity project. Let me now shift to the financial assumptions for the cloud and network services business. Before I begin looking forward, it is important to note that in the new operating model, the business no longer includes the network management and self-organizing networks portfolios. Likewise, we have added the Nokia software business, the managed services, the GSMR railway, the packet core, and the Nokia digital automation cloud portfolios. These changes in the operating model reset our comparable operating margin from 19% to -2%, which is the foundation from which we will begin to build. From here, we expect to reset the business and rapidly improve to finish 2021 with an operating margin in the 3 to 6% range. Let me take you through the plan we are executing that drives my confidence in achieving those improvements. First, the business had a few projects where our delivery fell short of expectations. We have quickly re-engineered those projects and will see the bottom line recover in 2021. As stated earlier, we expect to grow faster than the market and expect our mix to shift to the faster growing, higher margin emerging opportunities. This will have a net positive impact on our margins in 2021. In addition, to address the faster growing, higher margin opportunities in the future, we are rebalancing our R&D spend and investing in the areas of technology leadership I mentioned. These investments will secure our technology leadership position in the years to come. Restructuring will play a role in our improved financial performance. As we restructure, we will automate many of our operating processes, we will invest in our remote delivery capacity, and we will create several centers of excellence and consolidate our workforce in those centers. In addition, we are planning for some salary inflation and other additional savings that will be partially offset by foreign exchange rate changes. As I said, we expect these steps to result in a business growing faster than the market, with assumption of 3 to 6% comparable operating margins for 2021. After having set a strong foundation in 2021 and looking ahead to 2023, I expect that the business will begin to accelerate and scale. This would drive operating margins significantly higher to the 8 to 11% range. To achieve this, I have the following plan: focused execution on sales growth and the change in mix towards the emerging market opportunities, which will drive solid operating margin benefits. Next, continue to fuel and differentiate the business by further rebalancing our R&D investments towards the emerging opportunities and, more significantly, to software as a service. With this shift in investment, we extend our leadership and become a technology disruptor in the market. We plan to continue to realize savings from restructuring, most of which will come from actions in 2021. As we restructure, investments will continue in building workforce capabilities in key areas like cloud, automation, and artificial intelligence. Building on our expected 2021 progress, additional benefits from automating our operations, shifting to remote delivery, and establishing a few centers of excellence will continue to drive improved collaboration and customer satisfaction. Wage inflation and a few other operating model savings will be realized. As a result of these actions, I expect the business will have comparable operating margins in the 8 to 11% range at the end of 2023. To close, let me reinforce a few points. With our strong foundation in software services and private wireless, Cloud and Network Services Group will reset our business in 2021, refocus our investment to drive our business mix to the faster growing emerging opportunities where we already have a solid foundation, increase our R&D to drive technology leadership to be number 1 or number 2 in the markets we serve, implement the SaaS model and aim to have 1,000 customers leveraging this platform by 2023, up from 250 today. Finally, with the collective actions we are taking to reset and accelerate the business, we expect to outgrow our market each year within the period 2021 to 2023 and deliver healthy profitability. Thank you for listening. This now concludes my presentation. And now I will pass it back to Espo and to Jenny Lukander, President of Nokia Technologies. Jenny.